Hello, 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 and welcome to yet another episode of the Conversation Capital. Bonga, Bueta, how you doing, girl?
I'm good. How are you?
I am awesome, thank you. Do you know what SARS stands for?
South African Revenue Services.
Ow, po, bona kema. Yes. So I've got a very special guest. We've got Mrs. Charlotte Mamadi, who's going to be teaching us all things to do with tax. Thank you so much for coming through. How are you?
Well, nervous, but I'm good.
Are you a little bit nervous? Don't be.
Yeah.
It's going to be very much chilled conversations. She's a tax practitioner and also a lecturer, and she lectures tax. So she's the perfect person to chat to, just to tell us, how does SARS work? Why does SARS even exist? Why do we need to do all of that? And so maybe just segueing straight into the first question, what does tax season even mean? What is tax and why should we pay it?
Okay, tax season. It's when we have to all do our tax returns and submit to SARS, because like in a space of an employee, you pay your taxes every month, like a PAYE. I'm sure you see it on your payslip. And then it goes through the payroll, and then the payroll makes up like an IRP5. So it's like a form that they complete at SARS with all your earnings, and they generate an IRP5 that you then they give it to you in May, and then in July the tax season opens, and then now it's almost like a reconciliation period.
What is that IRP5 stand for? I know this might be silly. It doesn't matter.
Actually,
Yeah.
we just call it
Okay.
I never thought of it.
I've never thought about it as well.
Okay, yes.
Yeah, that.
Yes.
But anyway, so yeah, it's basically just like a summary of your 12-month earning.
Yes.
And remember, your tax year starts 1 March and 28 Feb of every year. So at this moment, we are in the 2024 tax year.
Oh.
So 2023 ended in Feb this year.
Okay.
Yeah. So everything was done. Then the reconciliations happened in May. Then in July, we are submitting. So basically, SARS is reconciling everything. You coming back with, there is my RP5, and here are my other earnings that I made, your rentals or whatever, other things that you make money from. And then you submit it to SARS, and then SARS says, because remember, everybody that makes money in South Africa must pay. You live here, you gotta pay as you earn.
I like that, because I was wondering in the beginning, I thought, okay, your employer does payroll. So I was wondering, if you don't work, do you not pay tax?
If you don't work, what do you mean? Like at a certain employee?
Yes. Do you have to be employed to pay tax?
Make money in the land you pay.
Okay.
So we call it source. So South Africa is the source. So we are a resident-based tax. We use the resident-based tax system. So what that means is, everybody in South Africa, if you're a South African resident and you make money, you get taxed on your worldwide income.
Yes.
That's the law. You make money in South Africa, you make money in the US, you make money everywhere. South Africa wants a piece of it because you belong to South Africa. So you need to pay.
So even if I work in the UK, I have to pay.
Yeah, so you need to declare it, and then there's things that are called like exemptions. So if you're out of the country for 183 days, the first 1.25 million that you make is tax-free in South Africa. Then you pay tax on whatever. So if you're getting paid 2 million, the other 500,000 you'll pay tax on in South Africa. So you'll pay tax in the UK because you'll pay at source as well. UK also wants a piece of their money, because you make money in their land. So you're using their resources. So they want to get something out of it. South Africa the same. If a foreigner comes and works here, we tax them at source. We only tax them on money that they make in this country. But we're not that.
Let's say now I live in SA, but I'm actually employed remotely by a European company.
But where are you resident?
I'm living here, but my money that I make is from Switzerland.
Then we have these tax treaties, like South Africa has a double tax agreement with other countries. There's other rules around it, so it depends on your contract and where you actually are resident. If you're a South African resident, you live in South Africa, you make money remotely, remember, you get taxed on your worldwide income, irrespective of where you are. As long as you belong to South Africa, we want a piece of that.
Okay, so one of the things that I find is that, especially like somebody who's got like several sources of income and things like that, it's the part where, firstly, how can I evade? I'm joking.
It's a legit question, because already you're feeling, or are you paying some amount?
You're
Can
paying
I
some
keep some to
amount,
myself?
yes, and then you've got a business in this, a business in that, and then at which point, like the practical numbers, what's the threshold? At which point do I need to start paying SARS? And at which point does SARS start paying me? Because some people get tax returns and they get some money back, and the practical things. If you could give us actual numbers, how much does your business need to make? Is it better to register your side hustle? Let's say your side hustle is playing the piano. Should somebody be paying you directly into your account, or should you then set up a business account? It will be better for your taxes and things like that. How does one really get the best out of life and pay the least?
Okay, firstly, taxes. Why do we pay taxes?
Yes, maybe let's start there. So that
This
we won't hate
country
it so much.
will-
Maybe if we understand
this country
why.
will not run without your money.
Yes.
So you contribute to the revenue of the country. So at the moment, we've got different taxes, right? We've got corporate tax, which is for businesses.
Yes.
We've got individual tax, which is for us. And then we've got your VAT, you've got customs. There's a lot of taxes.
Yes, yes.
So at the moment, the tax that is contributing more to the revenue, which is about 35.5%, it's personal income tax, us.
Yes.
Because it's easy, because it runs through your employer.
Yes. your
So
employer,
then,
sorry.
so it's so SARS can just take it from there. So it's
Yeah.
easy.
Yeah.
And then another thing, the province that pays a lot, 58% of that 35% is Gauteng. So we're rich.
We are keeping the country together here in Gauteng. You see these Cape Townians, Cape Town, huh?
So but these are the stats from last year, so it's interesting to see.
Yes.
But basically that's that. And I always make a joke with SASA, but SASA, when I say SASA, I mean the older people, my parents. So I always say, without us, you can't even live. We need to pay for our grannies. So that's what gives me hope when I pay tax. Yes, the management of things, how they are. It kind of discourages one.
Yes.
But look at the bigger picture, I guess. That Gogo's Banbani is having bread because of me, my contribution. And like I said, you make money in South Africa, you pay. So the threshold from when you start paying, if you're under 65, it's about 91,250. You need to be making less than that per annum.
Okay.
So it's about 7,000 rand
A month.
Yeah, a month.
Yeah. So if you earn about 7K a month.
Yeah, 7 point something, then it's like, you don't pay tax on that.
Okay.
However, who's content with 7,000? So you find you that has other sources of income.
Yes. Yes.
Now, let's say you get paid, you're employed, and then you get paid like 10,000, and then you pay your PAYE on your 10,000, but you've got your rental, you've got your interests. Those you don't, obviously there's no tax being paid on them, so you need to then declare them. So they add up to that 10,000. So when you do your tax returns at the end of, like now in tax season, you take your 10,000 times 12, and then you add your rental income and your interest. And interest, it has an exemption. The first 23,500 is tax free. So anything after that, then you add it, and then on you would have paid tax only on that 10,000 or 120 or something. Then there's a shortfall because now you've added this extra income.
Yes.
That's when you end up owing SARS.
Yes.
Because now it's not balancing. You only paid for the 10,000.
For the 10,000, yeah.
And then there's a short. Now, if you earn more than, like if you have passive income, so we then come and say, register as a provisional taxpayer so that you pay your taxes every 6 months. So what happens is now in August it was 2024 first period, and then you also submit 2024 second period in Feb next year. So what you do is the tax year starts in March, so it's March, April, May, June, July. Remember, in August you're starting to pay, so you've got 5 actuals.
Yes.
You know you received money for 5 months. Then you add that, and then we divide that by 5 times 12. We analyze it, then we work out tax on that, and then it gives you, let's say you end up owing 30,000. So we say, okay, in August just pay 15, so you just pay half.
Yes.
Then next year you would have worked for 11 actual months. I mean, from March until Jan, it's 11 months. You are sure.
Yes.
Then you take that, then you divide by 11 times 12, just to incorporate the next month, the February month, and then there your payment, it has to be so accurate, because if it's less than, I think, about 20% or off by 20%, then there's like penalties. So because now SARS is saying you can't, 1 month is not that bad to underestimate. You need to make sure that you are as accurate as possible, so that you don't end up getting having to pay lesser tax. Because come come July, we say, okay, in August you paid this amount, fine. August doesn't have really penalties. In Feb, you said in 12 months you would have made this and you paid that.
Yes.
Now when we take the actuals, I mean, now you've got 12 months already. Now it's got your IRP5s and everything. We're like, let's check how much tax did you pay, and then we say this tax that we are calculating now on your actuals versus the one that you paid in Feb, there's a bit of a shortfall. You underestimated. Then they hit you with the underestimation penalty.
Sure.
So that's why the Feb one, as a provisional taxpayer, you'd rather overpay than underpay.
Do they pay you back? Can you penalize them for overpaying?
You get interest.
Oh,
Yeah,
okay.
interest on overpayment.
Ah,
Yeah.
okay.
And then there's
that's-
interest on underpayment.
Oh,
with the penalty.
okay.
So-
So the money that you can sometimes get back is that overpayment.
Yes. So yeah, essentially, when you get your refund, you have overpaid tax.
Oh.
Yes.
But
okay.
we people do not understand. Everybody thinks SARS owes them.
Yeah,
Everybody
because
believes SARS owes them.
Yeah, you get
Because
paid
when
once.
you speak to
And then you're like-
your friend, and then you speak to your friend, but when we talk, do you guys disclose your salaries to each other? No. But why do you then want to get a refund because she got a refund? You don't know what goes on in her salaries. You don't know what goes on in her stuff. Just because you guys work co-officing the same things,
Yes.
no, it doesn't mean you guys are getting paid the same amount of money.
Yes.
And maybe she or he's married in community of property. Now, that affects your passive income, not your employment income. So when you're married in community of property, if you're earning interests, your husband is earning interest, you have to declare both your interests on your tax return. Then we half it, and then we take out the exempt portion, and then you pay tax on whatever is left. So
Guys, did you know all of this?
No, I was about to say, like, a lot of us tax is overwhelming. As long as I've done that, yani,
Absolutely.
that
Yeah.
comes from my RP5,
Yes,
I'm
that's
good.
it.
Yes.
But there are people who have a lot of passive incomes who are probably not declaring.
yeah.
So,
And sorry.
how does SARS find out?
Oh, they've got access to third party
Mm.
info. So they have access to your bank. So when you must look at your tax return. They already populated it with all the interest that you'd have received from your investments, from wherever, Discovery, Momentum, wherever. Look at your tax returns, and it's right there. So they have access. They know what is going on. They're just giving you a chance to come clean and say, actually, I do have.
So even if you have rental properties, they'll know.
Because it's registered, it's in the country. Yes.
Wow.
So it's when they get finicky, they can find.
Yeah, we've
You
seen
know?
that on social media.
So if I'm somebody who has a job and then has the rentals and this and that, is it better for me to register a business?
Okay, a business, it's got a lot of admin, because now you have to submit your annual returns at CIPC, If it's not a big thing, like another company that you're starting, I personally would not advise. I'll say just be like a sole proprietor. So have like you're a person that has multiple incomes, and then register as a provisional taxpayer, and you get the benefits also of just being able to reduce your income with your allowable deductions, your pensions, if you have rental property, then what we include in your taxable income would be your profit. So you first work out your income, your rental income, minus your levies, minus your whatever's that is related to
to the
property, and then what's left, which is the profit or the loss, then you include it in your taxable income. If it's a loss, it reduces your taxable income as well. So
reduces, or it must be nullified if I didn't make any money.
You want everything to bring down things, as much as possible.
Yes.
So we'll put it there as a loss, and then also like let's say on your tax return, fine, there will be that rental loss or whatever. It will be zero, but it carries over to the following year. So if you have a profit next year, it then offsets.
What does offsets mean?
So,
if I lost money this year, but I make money next year,
so let's say
I must pay for last year. Oh, I had stress.
Okay. So let's say you have a rental loss of 10,000 this year. We carry it over to next year. Next year you make a profit of 5,000.
Yes.
So we say you're sitting on a negative 10.
Yes.
So we say 10 minus 5, you're still left with a negative 5.
Yes.
That moves on to the following year. So it helps.
So make sure you lose at first a lot.
I'm
Make
not
sure the
saying-
losses are heavy at the beginning.
I'm not saying this. I'm just saying. Yeah. So your aim in life is to reduce your taxable income as low as possible, because remember, we are on a sliding scale of 18% to 45%.
Even that, I want to get to that.
Okay.
But finish your sentence.
Yeah. So 18 is from 0 to I think 200 and something. Then it moves up. Well,
Yes.
I don't have the correct figures,
Yes.
but I know the 45% is from 1.7 million. If you're earning 1.7 million and above, you're on a 45 bracket. So we're taxing you at 45.
I want to understand that, in the sense that I feel like people get punished for earning more.
The more you make, the more you pay.
Why?
Because you've got more.
Are you consuming more of,
You're using a lot of our
South
resources
African
more.
air? Are you breathing more air than everybody else in this country, South Africa? I never understand it. I must be
using a
honest, I
lot.
don't understand it.
You're using a lot of South African resources. It's just the way it is. The richer, yes, will always be richer, but they must pay more.
I understand paying more in the sense that your 18% if you're earning 20,000 Rand a month compared to my 18% if I'm earning 1.7 million. Mine is more. I understand it in that context. We can't all pay 10 Rand. But when we're talking a percentage,
increases.
that's the part that I really don't understand. If you could maybe just, how did you we get there?
The
And
percentage.
is it across the world that they do that, or is it a South African
No,
thing?
it's not across the
It's
world.
across-
different. It's different.
It's different.
Every country has their own rates.
Yes.
Own whatevers. So the 45, it's a bracket. So it's a calculation. It's not only we take 1.7 million times 45. It's a calculation on its own. So what we do, we look at which bracket you fall under. So we'll say, okay, if you're earning 1.7 million, you are in a 45 percentage bracket.
Yes.
Then there's that long calculation that you do in that. Yes, the 45% will be featured in that calculation.
Yes.
But it's just to say, where do you fall in? There's a 36, there's 25%, there's 36%, there's 18%. We look at your salary from this point to this point, which bracket it falls. Then we put it there. You use that calculation. I'll have to just show you on paper how it's done.
Yes.
But yeah, it's just to gauge okay,
What bracket do you
what
fall
bracket you
into?
fall in.
Okay. Now that okay, fine. That being said, you're saying that it's every country has its different rules. Is there another country where the percentage is standard? Everybody pays 20%. No, everybody's
Not-
adjusted.
Not that I have worked with so
I
far.
just know there are countries that are not as high.
Yeah.
It's not as high as our percentage, especially when you go up. But as far as a standard one,
I doubt.
yeah, maybe
Okay.
people would educate us in the comments.
Yeah,
but I'm
and
not
then
aware.
Yeah. No, I've
Because
never worked with
that
the
concept. It really fascinated me the first time I heard it. I just couldn't. Even now, I can't fathom.
the sliding scale.
Yeah, I can't fathom.
She kind of pointed to a very important one. Like, consider this. How many roads do Cecil trucks break? So you can't tax them the same. Because you, with your private company that's very small, you're not breaking as many roads, polluting as much
Okay.
air.
So it's not a joke when I say, do they breathe more air? They do.
Exactly.
In a very poetic, yeah, they do.
So it's actually a bit of grace that they just standardize it depending on what bracket you fall under. Because if we now had to count the number of people that had to get in a car accident because of the potholes that you made, if we had to calculate
Okay, it standardizes.
Yeah, so that's why she said it's a matter of how within that country.
Yes.
The
resource that you're using.
We are using people's tax to build roads, bridges, and your company comes and breaks
uses
it.
half of
Exactly.
the resources.
Exactly.
It actually goes to running. Okay, we're thinking that yeah, finally.
I guess
Landing.
when you think about it in the personal sense, it's where it's a bit. But
Yeah.
me,
Yes. I'm like,
I don't breathe more.
I'm not breaking more roads, but yeah, I hear that, and that's
Like
why
your pension
that's why
doesn't
things
make
like
sense. Like,
yes, and that's why things like medical aid as well. I believe that you can claim that, right? Because you're not using the government resources for that.
Medical aid is it's a credit. It used to be a deduction. It was nice when it was a deduction. Because remember, deductions decreases your taxable income.
Okay.
But now it falls there at the bottom after your rebates on your calculation. So it's no longer a deduction. So it's
Oh.
just the credit that gets added to your rebate. Rebate is what SARS is giving you, like, okay, you can reduce your normal tax with a rebate. Or at the moment it's 16,400 and something, if I'm not mistaken.
Okay.
So after we work out, so we take your salary, your fringe benefits. Fringe benefits are what your employer pays for you. They are non-cash benefits. So that will be like your travel allowance that you get from work. You don't get paid physical money.
Yes.
And then your pension, if your employer is paying half your pension and you're paying for yourself, those are benefits. So you add all of those together, and then you get a bonus. A bonus, we calculated alone, and then we add its tax to your other tax. I'll get there. So the reason why we don't calculate bonus together with the salaries on their tax is because it comes once. It comes as a lump sum. So you can't now say, you've received it for 12 months.
Okay.
So it will be your salaries, your fringe benefits, and then they make up your gross income. And then let's say you've got passive income. You add your interest, and then after you take your interest, how the framework is, it's your income, which is gross income. Then after gross income, you minus your exempt income, which is the 23,500 from your interest.
Yes.
Let's say you get interest of 30,000. The first 23,500 or 800 is tax free. The balance gets added to your salary, and then you get your income. Now, after income, you want your deductions, which is your pension. You paid pension. You contributed towards pension. You contributed towards your retirement annuity, which is we call it an RA.
Yes.
And then what else? You claiming your travel.
Yeah.
So using your logbook, if you get travel allowance, there's different codes as well.
Yes.
You get reimbursable travel allowance, you get non-taxable travel allowance, you've got taxable travel allowance. It depends which one you and your employer agreed on. Then you have your travel deduction. So it will be your pension, your travel, that then reduces your income that you received, your salaries, your whatever incomes. And then that brings us to your taxable income. This is now where we work out tax. Which bracket does this number fall under?
Okay.
So then you go look. If it falls under 25, we take that amount, and then you do that long calculation, and then it gives us your tax. It's almost like tax due, or well, we call it normal tax. So now it says, fine, you owe SARS this much. So SARS is saying, I'm going to give you a rebate, just, to reduce this number. So 16,000. So you take that number minus 16,000, and then you work out your medical credits if you are the main member, not just a dependent. The main, you are paying for that. And also if you're paying for your mom, and your mom is obviously your mom is independent, she's a principal member, but the money is from your account.
Yes.
You can claim that as well.
Wow.
Because it's
You're paying.
you need that. I mean, your mom is a pensioner, so
Yes.
it doesn't really she doesn't really need the
Yes.
the deductions. You need them. So then there's a place on your tax return where you can then claim your
people that are
you are not a principal member, but you are the person that pays. So all you need to prove to SARS is that the money comes out of your bank account. The medical aid gives you that certificate that yes, the principal member is Mrs. Mariani, but Ursula is the one that pays.
Yes.
Then you get a more benefit.
Do you think I'm listening to you and I'm saying one of the things I'm learning some of the things we can claim back. Do you think South Africans underuse some of the things they could get back, the rebates I think you've referred to?
No, rebates they're automatic.
They are automatic.
Yeah.
So like you're saying, you can claim back maybe if you are not the principal member.
Yeah,
But do
lack
you
of
think they are
knowledge.
underusing it?
I had to tell my friend because he was saying I pay my mom's, because I was like, your mom is a pensioner, she's on medical leave, and I'm like, who's medical leave? She's like, hers. So I'm like, who pays? It's like, me. So I'm like, and then he's like, yeah. I'm like, no, you need money from SARS for that. And he's like, how? Then I started doing his tax returns, and then he would claim back that money,
Yes.
And he's like, oh, this is nice. And then the mom passed, and I'm like, sorry.
Yeah.
It's done. But
okay.
So a lot of people, I always refer to the Bible where it says, my people will perish through lack of knowledge. If you do not seek knowledge, you will not enjoy the fruits of this country.
Yes.
So
I love what
you
you're
just
saying.
have to, keep equipping yourself. Like you said, I'm inquisitive. I just want to know when I see something happening in the news. I want to understand. Like, apparently there's something happening in 2024 about pension, where you can claim your pension earlier because people are in debt and stuff. So I'm like, it's a nice paper to write on. Let's go and research it and find out.
The academic in you
What
is coming down.
more can we get? You
Yes.
just have to want to know more. I mean, it's your money at the end of the day. It's and at the end of the day, like you were saying, your company is closing, and then there's people that haven't been submitting. It is your responsibility, not your employer's responsibility, to submit your tax returns.
Oh yes.
It is your responsibility. So those people that didn't submit cannot blame anyone but themselves. Why were you not submitting? Why do you have a tax number? Do you think it's just there for fun? No, you need to find out, why am I having a tax number? Why am I paying tax? What happens?
Yes.
So you have to be proactive. Otherwise,
you brought up the Bible, and I want to just touch on maybe not the Bible, but church. If you pay tithe,
okay. Now that's another point of contention. I knew someone was going to ask.
you're the one that brought up the Bible verse, and immediately I said, "What about the tithers?"
So, two things with this. Churches these days, at least the ones that I'm aware of, they encourage people obviously to pay tax, to pay tithe.
Yes.
Number one, a tithe for me as a Christian, it's a personal thing.
Yeah.
It's your relationship with God.
Yeah.
Whether I pay it or I don't pay it, pastor, don't come after me.
Yes.
It's me and my God.
Yeah.
Now churches need money. Honestly, they need money to run their church. What they have decided, in their community, they decided to register churches as a non-profit organization. Register it in Pretoria. They give you that certificate.
Yes.
So for people that pay tithe, you give them the Section 18A certificate. Then they claim it back at SARS. Where is your relationship with God there? Are you not, is tithe not a sacrifice that you're giving to God? So, no. That is what I said, it's a personal thing. We look at it differently, yay.
But
So,
you can.
If you have a Section 18A certificate, you claim it back.
Look, really. Only on Conversation Capital will you get that ammunition.
Please subscribe to Conversation Capital. We are dropping the bombs.
So your conviction will lead you.
Don't do that.
It's gotta feel
No, I'm not making you feel bad. Your conviction, if it tells you claim it, that's you. Like I said, other people pay it, other people don't pay it. It's your conviction. So the churches are trying to. I mean, after COVID, churches are crippled.
Yes,
So
absolutely.
why then don't we encourage our people to pay, and then they'll claim it back at us? They're not claiming it back from church.
So I've also learned that after the whole during COVID, work from home, you can, like, your company can give you a letter to say the person works from home for a certain hours, and you can put that as part of your return. What is that? How does it work? Pros and cons.
Okay, so yeah, you get a letter, because a lot of companies now, they've moved to working from home.
Yeah.
You need a space set for the office. Like if you have a study, it's mainly for working. So you can't be saying this is your office in your
bedroom.
TV room or bedroom. So you have to actually, because SARS also wants pictures. Sometimes you need to take pictures. Okay, there's my table, there's my phone, there's my chair and whatnot. And then your company will give you the letter, and then now you have to look at the square meter of that room against your whole house, and then you can claim apportioning it to that. So if you have a person that cleans for you, you've got other things that you can, like, you spend money on to maintain that office. So you have to use that
monthly Wi-Fi.
Yeah, but now you have to balance it to the amount of the square meter against the house, because now you are using just a portion of the house.
Yes.
So that's how you claim from. But it's a lot of admin. One lady wanted to do it, and I told her, I gave her the list of, I need all of these. She hasn't come back. Admin. It's just a lot of admin.
Yeah.
But for a person that is really
Based
working
at home,
Yes.
then
It's worth
I
it.
guess you can.
It's worth doing it.
Yeah. Because it just also reduces. It's part of the expenses. Remember, your main focus is reduce my taxable income as much as possible.
Because the truth is, I think even just that, we do sometimes neglect that I use petrol to go there. You know, like when I was chatting to you, then you said, no, but what about the fuel to go there? What about your
entertainment?
By the way, she also does my tax. And so you brought up those things that made me realize, I'm like, oh yeah, I actually do put into this thing to get it done. You know,
your bank charges, whatever goes through your bank, you claim that, and you need to put in as much expenses as possible, because we have to reduce. Because remember, on your salary, you're taxed at a certain bracket. Now the issue now is going to be this extra income that comes, it pushes you to another bracket. So then you're going to have a bigger shortfall. So let's pump in the expenses, as long as they are justifiable business expenses, legit for that.
And then what does that mean? Does that mean one must always have receipts?
Yes. So what I normally do with my people, you keep a spreadsheet, put in your amount, date, and because when you submit to SARS, I don't submit all those receipts. For me, it's just in case they decide to audit. Then I give them those. But if they audit me, I first give them a spreadsheet. Usually they take the spreadsheet because it has the date, then the place that you went, or whatever, macro, whatever, and then the amount, and then we justify, or you were buying ink for your printer or whatever. So then I submit that to them. And so far they haven't given me any issues.
Okay. Oh, girlfriend allowance.
That caught her so off guard.
I'm just wondering now, what if you've got another
allowance? What job is that?
Yeah, like let's say somebody consistently gives you an
20K,
allowance, or even a daughter allowance.
That's like donation. And donation with the thingy, with your related parties. It's tax free.
Article 18. Article 18.
It's tax free. Between the parents and the daughter, the spouses.
That's tax free.
Yeah, it's
Article 18.
please, guys. But now the girlfriend allowance.
I'm genuinely asking. Let's say now you've got a boyfriend that gives you 30K a month, and it's there. It's coming in.
That's a lot of money.
How I wish, but but let's just say something like that.
I'm only kidding.
It's like donation. He's donating. It's like my
donating.
husband giving me money.
Yes.
I know. It doesn't go in, don't go in my tax returns for what?
Oh.
There's no employment here.
But if SARS asks about it,
It's my donation from my husband. You can't. It's our household. That's how we work.
okay,
Okay.
okay.
But there is Section 7.
Right.
Oh, it's
Yeah.
a donation.
A donation, a donation. Yes, there is section.
Yeah. No. In the Act,
Ah.
Section 7, there's rules who you can donate to. That you can't be taxed.
Oh,
I mean, it's
okay.
money in the house.
Okay.
It has nothing to do with
Yes.
employment or.
Okay. Then, I just looking at what Bonga had asked, like, at which point do you know that, okay, now I need some help for somebody to help me? And you said when you don't know. How do I know? How do I get to know how to do my own? Like,
When it's
short course, what's advisable to somebody who just, because this is my thing, they were talking about it on social media. LO classes is really helping us with anything, because you walk out of grad school, I've got like a whole master's, but I can't do my taxes. And then it's like, what was I actually learning? Because in the practical world.
it's you can do a course,
Yes.
but you have to keep up because tax laws changes.
Yes.
So, do you want that?
Okay.
If you're bored at home, you can do that.
Yes.
And
But
then,
you have to keep up.
do you auto assessment day? What do you think about them?
Now, that is for a straightforward person that just gets like your IRP5 and then your medical aid and your other things that SARS picks up. But SARS misses some things. Like I have a friend, she's a doctor actually, but works for an NGO. So she gets her salary and then it picks up her medical, but it doesn't pick up her retirement annuity from Discovery.
Yes.
And then they auto assesses her. And she's like, why am I not getting money? She likes money. She's like, why am I not getting money? I'm like, let me just see. When I check, I'm like, do you have an RA? He's like, yeah. And I'm like, it's not here. So SARS missed it somehow. So you can't, the auto assessment, it gives you an option to edit or accept.
Yes, it does. Yes, it does.
So always edit
Okay.
and check.
Okay.
And then you'll see, okay, everything is in order. Yes, they didn't put someone else's money in there, because sometimes companies, I don't know how they do this. This other client, he's a Metro Corp. He receives money from a construction company, and he's like, but that's not mine. I'm like, but it's in you. It's at SARS. SARS says it's your money. You received this money. Like, I don't even know the company, so we had to Google where the company is. I'm like, get your police guys and then go to that company and maybe, So you can't just take everything that SARS says. It's a system. So you need to check. And a system, it answers what is put into it. And
Okay.
I don't know.
Yeah.
You need to
because it's
be-
much easier just to click accept, and
Yeah,
move on.
yeah.
But you should actually edit.
And you
look
leave
at
your
it.
money there, your RA is not claimed, and then you lose money. I mean, my friend wasn't going to get anything. After we put her RA, she got 4,000 rands.
Wait, see,
And it's
guys.
like,
So
you
much
see?
money.
You see? I'm like, yeah. So, like I said, Dori, if you feel you need help, it's going to cost you to be on top of it, because we equip ourselves every year. The laws change.
Yes.
So we have to be on top of, okay, what changed? What is it? How is it going to benefit? Or how is it going to cripple? Then you're like, okay, my clients, okay, I've got these clients. I need to tell them, be aware of this or whatever. If your mind is not trained or your brain is not trained in that,
Yes.
you miss it.
And maybe if you're not fearful to engage you know, and write the letters and question and ask and
Question.
approach the
Yes.
experts and say, this is what's going on. Is it fair? Is it
Is it
right?
right?
You know, and have somebody explain to say, actually, it is fair, or actually, let's try to do this.
Mm.
You know, yeah, I think that's definitely my take home, to say, engage. It's your money.
It is.
You know, it's your money.
You also
Engage
are.
with it. Don't just accept the, you know,
what
Oh,
they tell
that
you.
was lovely. Thank you so much once again. Thank you. We could be inviting you again to tell us more. That was today's episode of The Conversation Capital. Don't forget to like, share, and subscribe. I love you guys. Goodbye and God bless. Mwah.